good, y'all? It is HB, the cordial version of me, so don't expect any entertainment while I'm talking. This is just gonna be very casual. But anyhow, we have a trade here. I know most of you are looking at this, man, that's a really skewed risk to reward going on here. But I will break it down for you. I'm hoping we can just hit my 50 points and be done with this. So we had a nice inversion right here. We grabbed the prior day's low from Friday. Okay, it looks like we're about to hit our target. And this is a live my funded futures account, by the way. So this will be a nice $200 day. You want to build it, man. Take it slow, learn the process, and embrace it. And boom, we should be hitting our target. 50 points, boom, beautiful. Okay, 200 bucks. But this is a funded account. I just started it a week ago. We're building it slow. Let's build that cushion before we start taking maximum trades. We have other funded accounts we can work on and over leverage into. Plus, I think I have another evaluation with my funded futures. Let me close this one for about 1300 off. Or let's see, MNQ. Yeah, I'll probably take it off. Boom. Let's be done with that. I actually took some losses on that account, that evaluation account, but we're back up to 50,000, so that's pretty cool. Like with my evaluation accounts, we're swinging for the fences, right? So there's going to be days where I pass in one day. There's going to be days where I'm back in drawdown, but we got to back up for the evaluation account. This funded account is at $642. I've only been trading it for 2 days, but let's break the trade down anyhow. Let's get into it. Okay, so we have a beautiful inversion, which is always tempting to get into early on, but you have to play by the rules, right? So let's mark everything out. Vertical line, 930, and we probably should be paying attention to see if there could be a possible pullback. And I tell you right now, this inversion right here is probably going to be a sweet trade, man. This right here, once it comes back and retraces, this will be a nice 50-point move with little to no drawdown. You can leverage into this sucker too. When the market wants to come back down here, I'm telling you, that'll be a nice setup. 50 points easy. That's why you don't have to rush into this when you see this inversion. It's tempting. Okay, it's very tempting to jump into this because you want to catch all this, right? And you don't want to take any drawdown. I had to take drawdown up here, right? But I had to stick to the rules. And the beautiful thing is, even if this leaves without you, you're going to get the double dip. Maybe not in the same session, right? But you're going to get a chance. If you have the opportunity to get on the charts, you're going to chance to double dip right here. But what are the rules? Okay, so we do take a prior day low, okay, roughly around here from Friday. We create this inversion. It was tempting to get in. It moved too fast. I wasn't willing to do it, understanding that the market structure shift was going to be roughly around here. Let me get a trend line. The market structure shift was going to be right here. Okay, and we'll make that like yellow or something. Okay, there goes my son throwing a tantrum. This is the stuff you got to deal with as a parent. That's why you got to make money so you can send them to school so they ain't so bored sitting around the house. He's a 3-year-old. He just got out of the terrible twos, but he's still causing trouble. And no offense, ladies, you have no authority over your children. You're too soft on them. That's why you need a dad in the house. Okay. He wouldn't do that if I was there. Let's see. Let's change the color of that. So we got an inversion. Okay, change that to, what is it, purple. Is purple good enough? Okay, we get our market structure shift. Okay, and then we got our take profit at roughly 50 points. So we'll put it roughly around here, turn that green, and we'll put a text box right roughly around here. Take profit 50 points. Turn that green. Okay, see, there we go. Okay, so essentially what happens, we get this nice inversion, but there's no advanced market structure shift. I mean, you could, right? You could get in late right here, roughly when we close over this bearish fair value gap right here. It's a little bit of a risk though. We did take a prior day low, so that's why I'm kind of mad at myself. That probably would have been good enough to consider this advanced market structure shift. We took a prior day low, but I felt like it was tough because on the, I want to say it was on the weekly or daily time frame, there was a fair value gap we were running into. I thought we would retrace a little bit deeper into that. That's why I didn't want to take the play so early. It wouldn't have been bad, right? Because I wouldn't have to take too much drawdown, even if it did stop me out. But I wanted to kind of experiment and see how to play this market structure shift up here, right? And get an entry up here, considering that we have the inversion all the way down here, right? That's something I'm trying to improve at. Not getting too giddy about the breakaway gap in the inversion and how to get in even if it's late, because if you can figure out how to get in late, you're going to be comfortable with not missing these, and you're not going to take as many losses when you jump in too early and front run. I've taken so many losses front running. Okay, so I wanted to stick to the rules with this new funded account and see what it could do and not over leverage. But this was, if you did get in here and you trusted that the prior low was enough to have that big reversal and consider this that advanced market structure shift, you got in nicely. You got a beautiful move right here. Okay, but I played it safe. And what's tricky about this setup right here, and you see it a lot, is you get this breakaway gap and then you get multiple fair value gaps after that. The market structure shift is all the way up there at this yellow line. And technically, when you close over the body of this candle, this yellow line, okay, that is when you want to put your limit order at. Okay, so we come back down, we eat about like 30, 40 points of drawdown, but it's not much because I got one contract initially. We come back up and I put another contract at the L. If it decides it wants to move back up, that's going to give me confidence that we're probably going to push for the 50 points. Okay, but if it decides it wants to chop up and down, okay, I'm going to build my position. Each time we come to a fair value gap, each one fills, I'm going to add a contract. We fill this one, I'm going to add a contract. We fill this one, I'm going to add one more, and then I'm going to hope it doesn't go lower than where the stop would be. Okay, so that would be my stop. Okay, once again, do not over leverage up here, especially when you got when your low is all the way down here. I've seen it at times. It pulls back, okay, and then it'll move. Or sometimes it'll go against you, but you don't want to be over leveraged up here. Just put on your micros, and if you get a 200-point move with two micros, dude, it's a win. It's a win. Okay? It's a win. But don't get over leveraged over here. If you wanted to over leverage over here and trust that an advanced market structure shift was going to hold, okay, because we took a prior day low, that's fine. But do not do it up here. So one, we take a prior day low. Okay, let's write that out. One low taken. Okay, we'll make that one orange. I forgot. I gotta keep on doing these text box. 2, we have our inversion. And I'm working on a course, you guys, so if you're interested, I'll have that posted up, but it will cost money. You can't do free shit in life, you know what I'm saying? You gotta get paid for your time. Okay. 3, we have a market structure shift. Market structure shift. Turn that one yellow. 4. And let me finish this one real quick. I'll put entry. Okay. Stop loss. Okay. At low. Build position. We'll change that all to red. Then we'll do take profit. Okay, take profit 5. Now, let's run over it. We hit a prior day low, we take it, okay. We get an inversion. If you had the balls, you could have taken the advanced market structure shift, and that would have been just the close over this bearish fair value gap. As soon as we close, you just hit a market and you get in. Just get in immediately. Okay, 4, stop loss at the low. If it decides to retrace, you can build your position, but do not over leverage. Okay, and let's notate that as well. Don't over leverage. I don't know if I spelled that right. I'm sorry. Okay, don't over leverage at this type of setup. Okay, and maybe I will start taking photos of these moves, right? So you understand which setups you can't be over leveraging with unless you have that type of drawdown. So let's download that image. Keep that for reference. So 1, prior day low taken. 2, we get the inversion. 3, we wait for the market structure shift. We enter here, but don't over leverage. 4, stop loss at the low. 5, 50 point take profit. Now I was looking for a 15-minute SIBI, but it wasn't clear to me. On top of that, when I get high resistance, I just say, hey, I'm taking my 50 points and I'm done, right? I'm not going to mess around. If you look on the 15-minute chart, I don't know if there'd be too much lipstick to see. There was multiple SIBIs you could have played off of, but with a situation like this, do you go for this one? Do you go for that one? Which one? Do you go for this one? So it's like high resistance day, I just take my 50 points. That's what I'm aiming for. And that's a lot of points, okay? So take my 50 points, and when you get a great setup, you get in next time. You can leverage a little bit higher. But yeah, that's the play for the day. I think we're gonna have one more. I don't know if it'll get back down here before the end of the day, but even if not, you can play it at the Asian session right here. You wait, and this is the beauty. Even if you get this breakaway gap and it moves without you, and say you even were too hesitant to get in the market structure shift because you didn't know where to put your stop loss, or you didn't know how much drawdown you were going to take from this low to the market structure shift, which you can do, you can just wait simply. Wait for it to come back here, and this is one of my favorite setups because you're literally going to take little to no drawdown. Most of the times I only take like 3-4 points with these setups. I call it double dipping. and it will come back down. It's going to fill this gap. It's probably going to go a little bit further down, and then boom, it's going to go for 50 points guaranteed. The market may continue down, but it will retrace for 50 points, and it's easy money. Sometimes it could be a little tricky on the entry because a lot of times it'll fill the gap with a wick, okay, or it will go to consequent encroachment. Usually, sometimes there was one time I missed a big trade because I thought I was going to fill the gap completely with at least a wick, and it short ticked me from getting entered into the trade, and I missed this massive move. So, if we get back down here, I'll probably put it at consequent encroachment, my entry, my limit order, and I'll let it ride for 50. And yeah, that'll be a nice, easy trade for today if we get down there, which I think there's a good chance we will. So there's many ways you could have skinned this cat. You have to be flexible. You have to be free in the way you trade, man, because it's not always going to be an exact science every single time, and you have to take into consideration how much capital you're working with. And look, when I entered here, I didn't know how deep we were going to retrace. I didn't know, but I did know we're probably going to come up here and take these equal highs, right here, roughly around here speaking. We were probably going to take that, and it went in line with my 50 points, but it was a matter of timing. When and how is it going to do that? Because it could have went deeper, okay, and then done it. But if you do not over leverage, you give yourself a chance to be flexible. You can build into this position, okay, and hypothetically speaking, say it just did flush down and it stopped you out and you built into this position. At least you didn't blow out your account, right? As opposed to going all in right here and then it's just pushing you all the way down here. You blow out your account and then it decides to move in the direction. So be flexible. What you're reading is probably right, but you need to be free in the way you go into it. Now, a lot of people would be like, whoa, bro, you were like, your risk to reward was all off. I understand, but we're building. Okay, I'm confident in this low that it's going to hold for my target. It's just a matter of how deep. We got one, two, three. We had four essentially fair value gaps that were created. Five. How far back is it going to pull? Now, for me, I knew typically maybe 25 to 30, and even that, usually I anticipate 25 points. This went 31 points. Okay, but I was flexible. I took one micro up here. I said if it wants to come back up and tap back into it, I'm gonna put another micro, and that's a good chance it's gonna hit my 50 and move up without retracing. Okay, but if it wants to go deeper, bring it on. I got something for you. I'm just gonna make more money, right? Because it's gonna come back down. It's gonna tap me into more positions. It's gonna put my entry lower. And even if it doesn't want to hit my target, I'm flexible. I can take a small profit if we retrace back up, or if this thing wants to continue on down, I can break even or maybe take a small loss. But be flexible. Be flexible. That's extremely important. And I apologize, wasn't the smoothest stream. I lost my headset, so I was a little bit all over the place. And there's lots of things going on, managing different accounts. I'm managing multiple other accounts off of this computer that are funded. So if I sound a little scrambled or I sound, like I'm aloof, that's probably why, because I'm trying to juggle like 20 different things. But this is Havoc. You saw a live execution on my live funded futures account and a my funded futures account for another valuation that I'm working on. And I'll probably pass that one today. I'm gonna put a limit order. In fact, I'm gonna do that right now. And boy's just throwing a temper, man. I'm probably gonna put a limit order, okay, for this account. And most likely, I'm gonna go for broke, man. Or let's see, C2, 3. Let's see. Yes, that is working. Consequent encroachment. Put our stop right here. See, this is a starter plan, so I can't I'm gonna go all in for it, but remember, this is a valuation. I'm not going all in on a funded account. So I can take $990, and I'm confident if we get tapped in here. Okay, if we get tapped in, let's see. If we get tapped in here, I'm confident we'll be safe. And we will aim for 50 points. See how much 50 would. See, we're gonna get our 3,000. See if we add another contract. How much drawdown? I can live and die by this. That's how I play evaluations, you guys. I can live and die by this trade, depending on how I want to play it. 1260, and I probably will take a massive chance with this. 20083. Yeah, that would cut me just short. You know what we'll do? We'll go 2. We'll go 2, and we will play it for about 50 points. A little under that, depending on where this thing wants to move. So, well, even though we may not get this one funded off of this trade, I do. It'll be a nice chunk of change, and I can wake up tomorrow morning and pass the evaluation easy with one trade. So I'm not going to over leverage too much. Yeah, I think that's a good setup. I think that'll be a good setup. So I'll have that ready to go if the market wants to come back down anytime soon. And you know what? It's 10 to 11. Is there some sort of inversion going on that I haven't been paying attention to? There might be another setup for today, folks. We might come up here, sweep this high, and depending on, is there a prior day high here? Let's move this. Yeah, we might be getting close. I mean, once we take out this high, we might be looking for another move back down. You also have this bearish fair value gap right here that you can mark out. Remember, there's a volume imbalance here, so you have to take that into consideration. And we can take note of that. Boom. That's on the daily time frame. So once we get into this PD array on daily time frame, it might not be a bad idea to look for a move back down. But let's see. I want to mark out that high, prior day high. It's essentially, I guess it's essentially at the beginning of this bearish fair value gap. So I guess there's no really need to mark that out. Just look at this line right here. As soon as we hit that fair value gap, that's the prior day high, Friday's high. So right here. So yeah, there's probably going to be some nice setups moving forward for the day. It's just going to be a matter of when. There's an inversion. Look like we're going to create one here. Why wouldn't I not take it? Because we have this high right here. You would need to see some sort of stop hunt. You may get a nice little 15-point scalp if you wanted to play this inversion if it plays out, but you still have this high right here. You still haven't taken out the prior day high. We still have this daily PD array that we need to tap into before I would look for some sort of 50-point reversal. I'm not saying it's not possible. Like I said, it's totally possible. We could come back down here based off of that, but I wouldn't take that inversion if it plays out because you still have this high. I would want to see that get cleared out first. So this is a evaluation account that I'm just trying to add another one. So that'll be two my funded futures accounts, along with all my funded accounts with Top Step X. But yeah, this is HB with punch and profit. You saw your trade you could have gotten into today. There was many ways to approach it. Be safe, y'all. Stay blessed. Keep tape reading. Keep studying, and it will come, folks. It will come.